Has Coinbase stock bottomed? Has crypto prices started to bottom? Those are important questions that we'll answer on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to pick up the story of Coinbase. The company reported their Q3 earnings a couple of days ago. Revenue came in right at about $590 million. That was actually a decline of nearly 55% year over year, and it missed expectations by almost 10%, by about $51 million. But the stock acting somewhat positively to that just over the last couple of days, but still, year to date, stock's down 76%. We now have a $12.6 billion market cap on this one. We'll come over here and look at this from a technical perspective because we've got to have a discussion here. Do you want to buy Coinbase stock, or do you just want to straight buy Bitcoin or crypto or Ethereum or whatever it might be? I think that's a reasonable conversation, and I'll show you from a technical perspective which one I would buy. But let's talk about Coinbase. Again, revenue $590. They missed expectations. When we come over here to the financials, you are going to see that they're going to need to reaccelerate these revenues back north of $1 billion because based on their cost structure, they're starting to lose lots and lots of money over at this company. First thing I want to do, though, is look at some important metrics at Coinbase. And here's your monthly transaction users. They call them MTUs. And you see, yes, year over year, they're actually a little bit higher from 7.3 last year to 8.5. But you actually see quarter over quarter, we're seeing a decline. It was 11.2 in Q4 of last year to 9.2 to 9 down to 8.5. Seeing trading volumes also fall off the map quarter over quarter. And then assets on the platform, though, over the last quarter actually went up a little bit, but again, down significantly a year ago. The other thing that I want to show you is that trading volume. Here's your retail trading volume. This is just people like myself. That has absolutely fallen off the map. Not only year over year from 93 billion all the way down to 26 billion, but we're looking just quarter over quarter. I mean, it's just falling off a map. Institutional also down considerably and a much larger percentage of the business. But anytime I see retail investors bail like this on an asset class, it makes me to believe that, yeah, maybe we're getting close to a bottom there. The company's done a nice job of having kind of a third mix based on the different crypto on the platform. A third is still Bitcoin, a third is Ethereum, and a third is kind of other coins. And so I actually think that is a good mix for this company going forward. From an actual transaction revenue percentage, it's actually those other crypto assets that generate a little bit more for the company. That's why it's nice that they've diversified away from kind of the Bitcoin and Ethereum, the brand names, if you will, that you can get on almost all platforms. Coinbase becoming an area where you can get those like harder to find coins or the more niche down coins. Now, let's come over here to the earnings, and then we'll couple this by looking forward with this company and looking at kind of revenue estimates in the future, because these are going to have to start lining up. You see in the most recent quarter, we had that $590 million worth of revenue. That was down over 50% last year, where you were closer to $1.3 billion. Here's the problem with this company is these operating expenses, they can't catch up quick enough with a 50% decline in revenue. Almost no company would be able to do that, but the way this business is structured, it certainly is not possible. Your transaction expenses are going to go down if you have less transactions, but take a look at your technology and development or your R&D over this company, still went from 356 million up to 556. Your sales and marketing, though, I do respect that Coinbase actually knocked this down from 105 million down about $25 million or close to $30 million down to about $76 million. I actually think the current environment where you had crypto's in this orange line here, and it mirrors a little bit of Coinbase's stock performance. I actually think this is actually good for Coinbase in the long term, because as crypto was hot, there was obviously a lot of players coming into the market. And now that the air's been kind of let out of the balloon and companies are going to have to start surviving on profits, well, it's going to create less competition. And so if this company can survive, I actually think it's going to be a very, very viable business going forward. And part of that success is actually the elimination of a lot of competition that was starting to creep up as crypto was just absolutely on fire. Your general administrative expenses, those ballooned. I don't like seeing that from 242 up to 339. You would have liked to see them rein that in a little bit. You have other operating expenses. Those went from 118 down to 74. Your total operating expenses right here went from a shade over $1 billion last year on $1.3 billion worth of revenue up to $1.145 billion off of 50% less revenue. So we had over 50% less revenue, but our operating expenses actually went up by about 10%. So that's a problem. And obviously you take 590 and you minus off $1.15 billion and you get an operating loss sitting right at $556 million. Last year, you were actually positive from an operating perspective at $291 million. So as you can see, based on these financials, this company is, number one, they either need to shed cost very quickly. And I mean, we're talking to the tune of like, they need to reduce costs by over 50% just to break even. I actually don't think that's going to be possible over at this company, or they're going to have to reaccelerate their revenues. Now, good news is Wall Street is actually anticipating that. How they're going to be able to achieve this, I'm not exactly sure. Obviously, some of it is out of their control. If crypto gets hot and it starts going up, certainly their revenue is going to go up. But if crypto languishes or starts to another leg down, well, yeah, these revenue estimates are a crapshoot, basically. I mean, most revenue estimates are a crapshoot, but it's particularly the case with Coinbase is they're kind of relying on an asset price they have almost no control over. You see for the upcoming fourth quarter, revenue is expected to be about $628, which sequentially would be up another $40 million, but it would not really put a dent in this operating loss, even if these operating expenses stay the same or even go down a little bit. It's really, we're looking kind of into next year, like a year from now. Wall Street's expecting to accelerate back over $1 billion worth of revenue at this company. And that certainly would take us at the very least, maybe a smaller loss from operations. And I assume if they can keep costs where they are or shrink them a little bit, maybe a tiny operating profit. So that's what you're investing in with Coinbase is for this company to actually achieve these growth rates, which are really aggressive. You get into next year, you're looking at 60, 70, 80% growth rate on that revenue side. And on top of that, they're going to have to keep their cost in check. This is just to break even. I mean, we're not even talking about minting money like this company actually was. Okay. A year ago, off of $5.34 billion worth of revenue, they printed 2.1 to the operating side and $2.8 billion to the net income side. So you can see why a year ago, the stock was 76% higher, because these are fantastic results. But that is how quickly things change in these markets. When you come up here to a balance sheet, company has plenty of cash. Okay, it's less than it was last year. Last year, you had about $7.1 billion worth of cash. Now you got about $5 billion. You have a very few liabilities. It shows here total liabilities at $105 billion, but $95 billion is essentially customer funds. Obviously, if they run off with those things, it's a big deal. But absent of Coinbase committing a felony, then the company only has about $10 billion, actually probably less than $10 billion of actual liabilities that are related to the company and not related to customer funds. You have about $3.4 billion worth of bank debt, but again, balanced off by $5 billion. Even when you're losing this type of money from an operating perspective and you flow all the way down to a net income perspective, it's not really alarming. Although when you come over here to cash flows, it's a little bit different story. You got a 9-month cash flow. You pull down a net income number of a negative $2 billion. Again, they were positive $2.8 billion last year. I mean, we can see why the stock was so much higher. And this is certainly the upside. You get crypto prices back to where they were a year ago, and this company probably can start minting money from an operating perspective. But you pull through all your add backs and subtractions. Look at your stock-based compensation expense over the last 9 months. $1.1 billion worth of stock-based compensation at Coinbase off of $2.6 billion worth of revenue. The company had $2.6 billion worth of revenue over the last 9 months and $1.1 billion worth of stock-based compensation. That right there might be a hint on if crypto or if Coinbase is a better investment for you. Come down to net cash used in the operating activities at Coinbase, a negative $4.8 billion. Last year, it was a positive $7.7 billion. I think there's some funky things going on with these cash flows, like the customer accounts are accounted for somewhat oddly at this company, and it's not their fault. It's these accounting rules. And so I wouldn't necessarily judge Coinbase on cash flows. It's really their operating profits, which again, I showed you have fallen off a cliff. What I would do is come all the way down to the bottom of cash flows, and you come down here to a number, net decrease or increase, if it's not in parentheses, in cash and cash equivalents over the last year. And you see that over the last 9 months, the company's actually burned through $5.6 billion. Last year, they minted over $10.5 billion, although some of that had to do with some fundraising, but also better results from a financial perspective. Overall, these are pretty bad results, and I actually don't think it paints a great picture. You are absorbing a lot of risk with this one. If crypto prices kind of languish and then the retail, really they need kind of that retail buyer to start coming back. And if retail comes back, so will institutional. And based on their expenses over the last quarter, where they're running at kind of a $1.2 billion quarterly run rate on their operating expenses. I understand a lot of that is stock-based compensation, but you're running at a pretty large operating expense, and you're going to have to reaccelerate these revenues, and you're really just looking at breaking even for the next 2 years on the company. I don't know if that'll be good enough for shareholders. And here's the last point is here's a chart. And so the regular traditional candlesticks is Coinbase stock. And I've got here in orange, that's actually just the straight price of Bitcoin. And obviously the graphs kind of mirror themselves. But what I see here is in no way, maybe just briefly for like a couple of days, Coinbase stock has outperformed the actual crypto asset. But just based on the data that we have here, crypto outperforms Coinbase almost 100% of the time. And on top of that, you don't have kind of the operational risk. You don't have the dilution risk over at this company as well. You don't have fundraising risk. You don't have competition risk as well. My stance is if you are bullish crypto, and I can certainly see some evidence that at some point you see some kind of break from this downward channel that we're in. Look, we're going to see this across the board, across a lot of asset prices. Eventually, they're going to break out of these just steep downward channels and not necessarily snap back to all-time highs, but we're going to have a steady return to asset prices increasing. I certainly could see that actually with both of these assets, but just from a risk reward perspective, I actually think just buying crypto, Bitcoin or Ethereum in particular, probably less risky and the same amount of upside as it is with buying Coinbase, just the equity shares of that. That's just how I see it at the current time and the current financials. Certainly we'll keep an update on this story because that certainly could change at some point as Coinbase diversifies their business model and then maybe generates income in other ways. But right now, I don't believe the risk reward is high enough. I'd rather just own crypto. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.